Hello, and thank you for joining me today. So we continue with our weekly tax blocks. My name is Evelyn, and I'm reaching you from Preston Tax Accountants. I am a tax consultant, currently working with Preston Tax Accountants. We are based in Nottingham, and we do tax returns, end of year accounts, and any accountancy and tax work we do it here in Nottingham. So if you need any more questions, I'll leave our details in our summary video and you can contact us at any convenient time to you. So today we are looking at calculating the income tax liability. Yeah, that is our topic for today. As usual, I'm going to share my screen with you, and so that you can look at the video. I mean, just a summary, and based on that we can go through the discussion. Yeah. So just bear with me. Okay. So like I said, today our topic is on calculating income tax liability. We are going to look at obviously the income tax, the way it taxes that is grouped into sections. We have about 4 main sections. We have the non-savings income, we have savings income, dividend income, and all the others fall under other income. We are going to look at non-savings income today, and just a brief description on how it is tax is calculated on non-savings income. Yeah, that's okay. So how do you calculate taxable income? The way taxable income is calculated is, like I said yesterday, we were looking at the sources of income. So here we take out we bring all the income together. So let's say your income from your profession, trade, and all the sources of income. We bring them all together, and then we take out all your liabilities. You know, you if you're a trader, obviously you buy products to sell, and then you incur travel costs, you incur professional fees, you incur, you buy assets, to use in the company. So all these things we take them out, and then the net is what we tax. So we bring out all a taxable income is calculated by combining all the sources of income, and then we take out all the deductible payments, and then finally we take out your allowance. So every individual has got a personal allowance, and so we're going to have a look at what is personal allowance. Let's look at what. So what is personal allowance? So personal allowance is amount of income each individual is entitled to earn without paying tax. So it differs every year. So every year the government add a bit on the allowance based on the inflation, due to inflation. So every year. So this for the tax year 2020-21. If you don't know what a tax year is, I did it in my first video. So you want to go on our Facebook page, you will get the first there's a video on what tax year is. So for the tax year 2020-21, our personal allowance is 12,500. So any individual, you can earn up to 12,500 without paying tax. Yeah. That is for what personal allowance is normally on. And having said that, you can also lose your personal allowance. So when you look at the screen, I say personal allowance is reduces when you earn over 100K. Yeah, so you can lose your personal allowance. So when when your income is above 100,000 in the tax year, for every £1, uh, for every £2 that you earn above the 100K, you lose £1. Yeah. So let's say because the personal allowance is 12,500. So if your income is 125,000, then you lose all your personal allowance. Yeah. So for every after 100K, for every £2 that you earn, you lose £1 of your personal allowance. And normally, people who earn over 100K, they are required to file a self-assessment because of the fact that they lose their personal allowance. So sometimes I have clients who come to me and they say, oh, they have, maybe you could be in full-time employment, but then they will write you to file self-assessment. So then I have to explain to them that yes, because your income is over 100K. So any income over 100K, you get a letter from HMRC and ask you to file self-assessment. Yeah. So people like that, when I'm filing the self-assessment, we go through the same process, checklist. They bring us all their sources of income, and then we prepare the account, the tax return. But because they are employees, for instance, if you're an employee and your income is over 100K, you would have incurred taxes. They would have taken out tax through your pay as you earn. So any tax that you've incurred, you've already paid, we take it out. You are not taxed twice. We take it out. And sometimes when we do for them, some of them even get tax refund. So if your income is over 100K and you get a letter from HMRC to prepare self-assessment return, you don't need to panic. All you need to do, they just because you are losing your personal allowance, you are required to file self-assessment, and we can help you if you get a letter like that. We'll be there. It's very easy. Our charge too for that is not expensive. We can always help you to do that. So let's move on to what it's on the screen. Yeah. So what is non-service income? Earlier when I said the way we tax income is we have about four groups. We have the non-service income, service income, dividend income, and all the others fall under other group. And all of these, they have different tax rules. So today we are looking at non-service income. When we say non-service income, all that we are saying is that any income which is not savings, yeah. So and which is not dividend income as well. So things like income, a self-employed person, like a trader, your income will normally fall under non-savings income. We have salaries will fall under non-savings income. We have maybe trading income, property income will fall under non-savings income. So all the other sources of income that we went through yesterday, as long as it's not savings income or dividend income, we put them under non-savings income and tax it using the non-savings income's tax rate. Yeah. So let's see what we have on the screen again. Okay, so for tax year 2020-2021, we have different tax rates, yeah, for the non-savings income. So if your income for the year is up to 50K, then you are classified as a basic rate tax payer. So your income, after we've taken out your personal allowance, what will be left is 37,500. That income will be taxed at 20%. Yeah. And then the second group is the higher rate tax payers. So their income is over 50K up to 150K. So people whose income is over 50K up to 150K, their income will be taxed at 40%. The first 50K will be taxed at 20%. And then any income between the 50K to the 150K is taxed at 40%. Yeah. And then the third group that we tax in the non-service income is the additional rate. So here the additional rate is when your income is over 150,000. So in that case, it should still go through the same process. The first 50,000, we'll take out the personal allowance, which is 12,500 for 2020-2021, and you'll be left with 37,500. That will be taxed at 20%, and then the amount between the 50K and 150K will be taxed at 40%, and any excess will be taxed at 45% for the year 2020-21. Yeah. So I think that is what I have. Okay, another thing I want to add on is if people who are required to file self-assessment, let's say I've already said if your income is over 100K, you get a letter to file self-assessment. Also, yesterday we spoke about child benefits. If one of the income earners, their income is over 50K, and you maybe your partner is not working, and so they claimed child benefit. If that happens, the government will write to you, HMRC will write to you and ask you to file self-assessment because they want to claw back the child benefit that you've claimed. So in that case, you'll be required to file self-assessment. Yeah. So I think that is what we have today. If you have any questions, please, by all means, get in touch with us. Our website is www.persontaxaccountant.co.uk, and our email that you can contact us on is info@persontaxaccountant.co.uk. I'll leave all this information on my summary video. Yeah, so thank you for joining us today. Tomorrow we are looking at how to tax savings income. Yeah, so thank you for your time, and then hope to see you again tomorrow. Thank you.